Yo, Alexis.
Hello.
Welcome. So you start off first.
What?
Yo, wait, is Orlando in? Yeah.
Yeah, hello. How are you, Loy?
Hi, Orlando. Orlando, today Alexis will be joining us.
Huh?
Alexis is here today.
Hello,
Hey,
hello.
hi, Alexis. How are you? Nice talking to you.
Yeah.
That's
So I,
awesome.
so I shall remain silent today. You will be
Oh,
Alexis and Orlando.
no, I came to listen to you guys.
Oh, you're not going to be part of the show? Of course you can be part of the show. Oh, you're being sarcastic. Now I understand.
Hey,
All
Orlando,
right.
how's everything on your side? I hope it's okay.
Yeah, that's fine.
Have you
That's
been
fine.
streaming?
Yeah, I think we're live. Hi, everybody. How's everybody doing? Thank you, Loy, for spotting or having my back yesterday with these hurricanes. I am having a little bit of an issue with my connection. It's quite unstable. Uh, but now now we're here, and it's been quite an interesting day yesterday, right? The Dow hit 30,000. Everybody was happy. I was selling the Dow. No, I'm kidding. And yeah, but right now I have little trades going on. Actually, I think I just got into a. Let me just share my screen and we'll start with this. Yep. Yeah, I want to start talking about that US dollar. That weird move on the US dollar. Well, now what it wasn't weird move on the USD, right? But yeah, let me just grab the correct chart. And if anybody has a question, the chat is open for that. All right. So I do have my yeah, my footy shorts in play. So I wanted to talk about the US dollar, right? Because
Did he just get knocked out?
I think he did. I think he just disappeared.
I think he lost connection.
All right then. So
Over to you,
Alexis, it's up to you.
What? What's this? Well, I'm just popping into, just Torah now, right? What were you guys talking about actually? Like,
Yeah, I think much. Actually, why don't I just continue with the something probably you can help me shed some lights.
sure.
All right. So, hi guys. I think Orlando just managed to get himself kicked out for some reason. All right. Look, I'm actually. I think this discussion has been carrying on for 3 weeks already. Yeah. So, with regards to the S&P 500, I think everybody, to me personally, now everybody is just buying on hope. The rally of S&P 500, and I think personally for me, we have already seen that earlier in the years, the Robinhood traders, that means really the retail traders, they are really able to drive the market upwards. All right. Because as you all know, there has even been multiple reports from institutional grade Citibank. They said that, look, the rally before this, the rally was actually driven by Robinhood traders, which are the retail traders. Now, on saying this, we can see the S&P is rallied. No question asked. To what extent do you think it will actually rally? Because since Alexis is with us, fundamentally, Joe Biden is being elected, but nothing has really changed. Yeah, it's not as if he's being handed over. He has full control over the Congress and the Senate. I mean, the whole entire government itself. As it is, as what stands now, he doesn't have it. Yeah. So it might look as if the Republicans might still be in control. Of course, now we know that it's down to Georgia. Yeah. So what I'm saying and what I'm asking is that to what extent the rally currently that is going through now is driven by sentiments, or how much of it is actually really due to fundamental numbers that's behind it?
I think the simple, I think the easy way to look at it is probably Oh wait, I think he's back. Orlando, how are you back?
Hi, how are you? I forgot to what? To connect the charger on my laptop, and I lost connection, but I'm back, guys.
Awesome, awesome.
But yeah, so yeah, but go ahead if you were into something. Go ahead and finish. I'm
All right.
fine.
Okay, so Lloyd was just asking about stock. I think I'm just going to share a very quick screen and
Mhm.
uh,
Interesting.
just I think give a very for me I think it's a very simplified explanation of why the SPX 500 is going up. I think it's very simply as in terms of you're looking at retail investors or investors in general, we are always looking for things to buy, and I think the behavior of stocks is in such a way that it's a little bit more one directional unless there's a big what do you call a big crash of stocks or a very big depression, a huge negative news that comes in and pushes the price down. But
Uh-huh.
the perspective of stocks is usually like, are they worth buying? Is it going to have long term growth? So I think it's a combination of speculators versus people wanting to just buy and hold some stocks hold some investment, hold some in stocks because if you put money in the bank, you get negative interest rates, right? So they are
Uh-huh.
looking at places to so-called park their money. And let's just say if I'm a very new trader I'm not even a trader, I'm just someone who wants to put my money somewhere safe. I wouldn't buy a small penny stock. I will look for a SPI S&P 500 stock, something that's big enough, something that is safe enough, or what I think is safe. Park my money there instead of the bank and hope it grows. So I think
Uh-huh.
it's a combination of the perception in that sense. So we like to say it's sentiment driven, but I think a large part of it is there is nowhere else for money to go to. They can't put it in bonds because negative interest rates. There's nowhere else for the money has to go. So I guess stocks is one of the places where people are trying to find avenues in there to generate some sort of income, be it dividends or be it growth. Yeah.
Yeah, definitely. I agree with you in the sense that also that well, this risk appetite has hit a lot harder into gold and the US dollar. But the thing, yeah. But why do you think that? I mean, why do you think people are so are so risk open in the sense that are so contrary to risk averse, right? Putting their money. Investors putting their money in what I consider to be is a super inflated and a super inflated avenue, for investment because this rally is practically being pushed just by liquidity. Um, it's insane how these levels are not equal to the valuation, to real valuation of these companies, right? So in my opinion, this risk appetite that we're seeing right now, it's not supported by logic. But again, the mark. We're not here to understand the psychology of the market, just to trade it, right? But what do you think about that? Because it's an interesting question.
Yeah, I think it's a kind of a mix. I think it's one part liquidity and the other part is really the FOMO effect where if you are a retail trader and you have been trying to get in the market, at one point after waiting for maybe a week or 2 weeks, the patience runs out and say, I keep waiting and the price keeps going up. I'm going to jump in now. And you have like
Yeah.
many of these traders having that same FOMO and the fear of missing out
Yes.
mentality. I'm sure it's a big factor of driving the prices up as well because
Oh yeah.
I'm sure you guys are very familiar. Like if you really want to wait for a good stock price, sometimes you can wait months or even years for a price to really come back down to a good value.
Yeah.
So, yeah. So I think a big
Yeah.
FOMO
Definitely.
effect. Yeah.
Definitely. And again, and also on the other side, I keep hearing bears saying that now it's the top. 30,000 is the top. Yeah. Equities are always going to be a good avenue for investors to put their money in. What I still struggle with is just to understand the risk appetite right now, right? And do you know when Tesla is going to be added to the S&P 500? Because that is the day that is going to be a big boom on that on
Well,
the
I think that's
spools,
a
right?
Lloyd question. Lloyd, I think, owns Tesla, a bit of Tesla, right?
I thought it has already been added already.
Is it? Are you? Let's
I
see.
think
It
Tesla
hasn't,
already
right?
added. Let me have a quick check.
Yeah, no, it hasn't been added just yet.
Yeah, it hasn't. The T's are here. 1, 2, 3, 4, 5,
Uh-huh.
7 T's.
But that day is going to be a big boom for the S&Ps, for the spools. And I am looking forward to that day, right? Um, you know, and but the other thing about that is that do you think that this risk appetite is going to continue? I mean, the that is going to continue to have a such a bearish impact on the on gold and the US dollar.
I think the US dollar is very oversold at the moment. I mean, I'm looking at the technical perspective on the index.
Yeah,
Yeah, it's really oversold because how much further can it go down? And given the economic statistics, the US seems to be doing pretty okay in comparison to the other currencies. So I don't think it's going to
yeah,
go on for that long, I think.
yeah. I agree with you. And actually, I wanted to discuss that US dollar. Let me just go ahead and grab the screen for a while, for just a little second. Okay, so I wanted to discuss that US dollar, right? Where is it? Yeah, because as you said, this is the we're going to go to the high 5 hour chart or so. Like you said, the US dollar looks extremely oversold at these levels, right? I mean, if we look at the 12-hour chart, let's look at the 12-hour chart, right? And yeah, I mean, after a big drop of let's call it from high to low, right? From high to low, we dropped about 11%, right? We drop about 11%, and we have been trading inside of this range, right, for a while. But the thing is that also, if you notice, the Federal Reserve started to ease its round of QE, right? So that's the moment when the US dollar started to range here inside of this range, right? But talking about just indicators and oversold and overbought, oversold, right? Uh, let's go. Let's go here for the 3 day. Yeah, Williams percent range. Yeah, it looks extremely oversold. But the thing about this is that every time we've been in this oversold, since we started, right? Since we started that big move to the downside, every time we've been in this oversold region, we've had just like a relief rally before the next move. Right here, we had again a relief. Let me just eliminate this. A relief rally and then a boom back to the range. To say that, because I saw that we were again in this zone, and this was on Monday, right, when we had that big move on the US dollar, right, that broke. Let's go to the 2 hour chart so we can actually see it better. That broke with this structure, and it was quite interesting because that day the US dollar, what it did, that it was in mid European session, it broke with the previous 3 weeks lows. This line right here. So that was like a super bear trap in mid European session, and when the New York Open, the New York session open, bam, we broke with this structure, right? Which I'm going to delete right now because it's no longer in play. But it was also cool because we broke with the previous highs, trapping bulls, late bulls into the move, right here. And now we made a new low. Just talking technicals on the DXY, right? Which we are bouncing from. So right now, the US dollar is really, really non-directional or neutral to me, unless we actually break with the 92.70 level or so, on which we can actually forecast a move higher. But I believe that this risk appetite and the asset purchasing program and the low interest rates weighs heavy on the US dollar. But there's someone just guarding this level right here that won't won't let the DXY push past the 92 to 91.78 level, because it is quite the important level on the higher time frames, right, or on the larger view, right? Where is it? Right. Yeah, something like this. This is quite the level that has been that the DXY has been traded above for a long time. Just and right here, yeah, we traded below it, but let's assume that this didn't happen, right? We have been trading above this level since December 2014. Other than this period of time, right? So yeah, this is a big level that we're trading in at the moment, and just look at this chart, right? If we have a clean break to the downside, this is just technical levels, right? There's nothing more to it, just technical levels. But if we have a clean break to the downside, I mean, there's so much room for a bearish move that it's going to be quite difficult to break, because we're talking about at least 3.8% move to the downside to the next key level, and 7.8% move to the downside. So yeah, I believe that because of this is going to be a quite the hard level for bears to break. Now, if we go back again to the 2-hour chart, bouncing from this level, because of what we said, fundamentally also weighs heavy, right? So until we get some kind of a structure in play, right? I remain quite neutral here in the US dollar. I don't know what you guys think about that, but it has been quite the difficult trade in the past few weeks. Most for mid to long-term traders like myself. But I don't know what you think about the USD.
I think dollar index, I think during the Sunday analysis, that I believe the dollar index has been stuck within the range for the past 2 months. Yeah. So now, if any of you out there who is doing, I mean, for the listeners, if they're doing range trading, this would actually be a good time to have a long USD all the way up to the top. Yeah.
Yeah, and
for
actually,
trend
yeah.
trading wise, I think they should more or less stay out for the time being if it's trend trading.
And funny that you talk about the long USD, because I just saw the possibility for this trade. That range trade on the euro US dollar, right? For a long USD trade at the bottom of the range. I had this. Well, I saw this and the possibility of going short the euro versus the US dollar. I don't know what you think about this situation. It's just a range play at the top of the range, around the 119.20 or so. For at least a retest of the 118. When we had that, that this big candle is when we had that big move to the upside on the US dollar. And I don't know if you guys like to play divergence, but this is heavy. I mean, there is a heavy bearish divergence here too. Yeah, I don't know what you think about this setup at all, but like you said, I mean, if what I'm trying to do right now, right? I'm still not on that trade. But yeah, I'm not still on that trade, but yeah, it's a long US dollar play.
Actually, I will agree with you. Currently, for at least the mid sentiments, that means within this month, or at least the next 2 weeks, I would think that US dollar have room to actually go to the upside. Let me show you something which might interest you.
I'm sorry, I was reading the question. Yeah, I'm sorry, can you repeat that?
No, I say, let me show you something which I think
Yeah, go ahead,
can,
go ahead.
can repeat, answer the questions and probably to share.
Yeah.
Okay, so Alexis and viewers, Orlando. So I have on my chart, which is a US 500. This is a weekly chart, and the yellow line on my chart is actually a correlation line with what did I do? The US currency, US dollar index.
Yeah.
So this is a correlation of the US 500 and the index. So you can see that on the monthly chart from the past, index goes up, price more or less will follow. You see, I mean, structurally, we will see them actually quite close together. Now, let's look at recently what happens. There's actually a divergence between the stocks, equities, and the US index. Now, this actually makes a really interesting play for me. I didn't actually realize it 1 week back, but now that I look at it, what it's telling me is that if you look at the past, structurally, US dollar does follow the US indices, the equity side. That means it has a lot of room to actually play the catch up. You see how close it is during the 2018. So now we actually have a divergence between the equities and the US dollar. So we have lots of upside for US dollar to actually play the catch up. So there are lots of, there's a strong argument to be made that the dollar will actually appreciate.
Yeah, that's a super interesting chart, Lloyd, yeah, actually that's a super interesting correlation that we have here. When was it that we started to see the divergence between the two of them? Right there.
It's mid this year, yeah, about June period. We can see the divergence happening.
Wow. So so that's quite interesting. Yeah, and that makes for an argument for a appreciation of the US dollar, right?
Yeah. So the last time
that's quite interesting.
The last time we had a divergence, which was early this year, you can see how fast both of them snapped back, and then they cross path again.
Yeah.
So I wonder this time round how fast the snapback will be.
But do you think that for that to happen, equities have to suffer?
I would say yes.
Right.
I mean, equities on the long term, they will still rise, but as what I prompted just now, I think it's just a gut feeling on my side. The equities rising now is just purely based on hope. Yeah, there's nothing concrete supporting it. We haven't really seen Joe Biden's policies yet, by the way. Yeah, once it's out, then we can truly gauge what's going to happen. For now, it's still very murky.
Yeah, I agree with you. We haven't seen any politics, but one of the things that the markets hate is uncertainty, right? And I think we were talking about this a few weeks earlier, that this rally, in more than hope, it's about certainty in even if we haven't seen any insights into Biden's politics. Just by being elected president, in my opinion, it brings more certainty in the future of trade agreements and overall fiscal policies. Even though taxations are going to be higher, of course, for corporations, etc. But the stability that it'll bring, a Biden administration versus a Trump administration, I think it's part of why we're seeing this risk appetite back on the market. But again, I'm not trying to psychoanalyze the market. This is just what I think, and of course it can be debated. But at the end of the day, we're traders, and I mean, we need to trade what we see, not what we think, right?
Yeah.
The argument that you're making here on the correlation between is that the spoof? Yes, between the S&P 500 and the US dollar is quite interesting, right? My question, the only question that I have is if we're going to see that that cross again, or that dollar appreciation, would equities need to go down with it? I know. I mean, what I mean is that for that dollar appreciation to happen in this scenario, would it have to be triggered with a U.S. equities move to the downside or not? I mean, we will have to wait and see. But in any case, yeah, there's arguments on a lot of sides for a U.S. dollar bounce back up, at least on a recovery rally from these levels. So we are on the same page.
We are. There's lots of room. I will actually answer another question. It's by Roy. I think he was asking about the Hang Seng Index. So I've actually juxtaposed again the US indices with the Hang Seng Index. I don't know how many of you are actually able to trade Hang Seng Index or MT4. So you can see that in the past, this is a weekly chart, by the way. The Hang Seng Index, the valuation of Hang Seng Index is actually above the US 500. And that's not very far, even 2016, 2017. And then when it falls, we have crossover. So again, the Hang Seng Index compared to US, it does follow the US 500, even in the Singapore market. So now what the case I'm making is that this is where the Hang Seng Index is at the moment. This is where US 500 is at the moment. There's lots of room for the Hang Seng Index to actually catch up. So I would say yes, there's a buy there. I mean, there's a very good opportunity for price to go long. And for the audience at large, and I don't know whether Orlando is actually playing this. This is actually, what is this chart that I'm putting? Correlation. Oil, Brent crude oil.
Oh, go ahead.
Yeah, so for crude oil, again, before the huge plunge of crude oil has been valued above, has been, I would say, follow quite closely with the US 500. You can see the shape and pattern is quite close. So it's just only very recently this year that oil dipped below. So again, if any of you who is want to long oil or even natural gas, which is this chart, I would say now is actually a good time for those charts to play the catch up to the US 500. So probably this is the Christmas rally that a lot of traders are actually looking at.
Yeah.
Let's see how it plays out.
Yeah, I mean, oil. It's funny that that you mentioned oil, because I was looking at some money managers positions in the past. Let me just grab the screenshot that I'm taking. I'm sorry. Let's have a look at that. I sent it on my group here on the Actionable Analysis. Let me grab the screen right here. So I always look at this. Oh boy. I always look at this at the money managers positions, you know, right here. Money managers weekly net position in Brent WTI, US gasoline, and US heating oil, right? Just by looking, I like to I like to look at this just to see how big money is positioning itself, right? Yeah, and right, and even though the entire position, it's it's a bullish position, but the entire position decreased by what? Let's call it exactly what it is. That's 31 plus 14, 45 million barrels. It's still a very bullish position, right? In my opinion. and that might be for the Christmas rally, as you put it, or also because yesterday, yesterday I saw that day after day, um, the number of passengers flying in the United States alone has going higher and higher to post-pandemic highs every single day. So that might also be that, and because of the vaccine news, right? That of course, that all petroleum-based products are going to have an increase in demand, but also because of what I just told you, that air travel is opening up big time, and everything, and of course, and the Christmas rally, etc. We're looking at a very bullish market, actually, in crude. So yeah, I mean, I am not in any crude positions because I have missed it over and over. But I was looking at Brent. Where's commodities here? I was looking at Brent for a possible long right here. Let me just show you. All right, so this is a 1 hour chart. Let's go and let's just delete everything, remove drawings. Okay, so if we go to the weekly 1 week chart, right? No, that's too much. Couple of days, 3 days charts, fine. Yeah, so this is the play that I'm looking for on Brent, actually. So I saw that Brent had broken with, okay, this is the play that that Brent broke with this area of resistance, let's call it, right? And it's that high that I just pointed out, and these two highs right here. So what I'm waiting for really is a true retest of this zone right here. I know it's quite a big area, but yeah, if you zoom in, you can actually just lower it. I mean, make it less thick. But this is like the zone that I'm waiting for a real retest and rejection, right? For to grab a long position for a midterm swing trade, for example, because I do believe that there is room to the upside, and that would give, I mean, that would yield a nice at least 1 to 2 point, what was it, 150, 140, better than a 1 to 2 risk to reward scenario to first targets, which are the previous the previous lows that I pointed out. But yeah, I mean, there's a strong argument for a strong recovery in crude oil, right? And more so because technically speaking, we have broken with this zone right here that was very, very, very thick, and that was tested quite sometimes, right? This super bear trap was incredible, right? It was so obvious too. But the thing that I do believe that a retest of this zone would yield a nice a nice place to buy, yeah, or a nice play to the upside on crude for at least a retest of this area, right? That's my opinion in crude oil, but I do believe that there's something. I mean, because I mean, fundamentally speaking, what I just said can bring some relief into this market. Hello, are we off?
Yep. No, we are not off.
Okay, cool. But I do believe that we have gone through our time, and yeah.
Interesting discussion we had today. Enjoy it.
Huh?
I mean, I think today interesting discussion we had. Enjoy it.
Yeah, me too. Thank you for joining us, Alexis, too. That it was great to have you here. You are welcome to come back anytime you want.
Thanks, Orlando. Thanks, Lloyd.
Your point of view is always appreciated. So thank you, everybody, and we will see and talk to each other next week.
See ya. Bye-bye.
Thank you. Bye.